Good morning and welcome to this fresh new edition of Opening Bell on Moneycontrol. I am Nandita Khemka. Expiry day cues are fairly positive, mixed to positive if I may say so. Asian markets are trading with the positive bias. Wall Street saw a mixed close, but Nasdaq managed to eke out good gains on the back of a rally in the shares of Nvidia. GIFT Nifty hinting at a positive start as well. We are poised for a third straight day of gains on the Lal Street and did manage to defend that 25,200 mark quite smartly. 25,317, that's the recent swing high that we achieved during the week. So that level will be in focus today. Lots of stocks in focus today. PB Fintech had a large trade, Delivery also had a large trade, and there is likely to be a block deal in Mobikwik as well. So yes, these are some of the counters that will be in focus. Of course, monthly F&O expiry, so maybe there could be some bit of volatility because that's what happens on expiry days. But India VIX saw a good cool off yesterday, sub 13 levels, cooled off somewhere around 4% or thereabouts. Oil, although if you look at the global cues, has inched up after a steep fall over the last few days. Keep your stock related queries coming in on our live feed. We will try and take them up as much as possible, and all your queries will be answered by our technical experts on the show. We'll also be getting your fundamental voice on how to navigate this leg of the up move. But before all that, quickly take a look at the top headlines at this hour. Wall Street ended mixed with the Dow closing, Dow losing more than 100 points, while the S&P 500 ended near the flat line. Nasdaq managed to outperform as shares of Nvidia hit a record high. Treasury yields held steady as investors monitor Israel-Iran ceasefire. US Fed Chairperson Jerome Powell, in his second day of Capitol Hill testimony, stuck to his cautious approach to tariffs and inflation. He said Trump's unprecedented tariff regime is making it challenging for the central bank to project inflation and determine when interest rates may be appropriate. Interest rate cuts may be appropriate. Asian markets kick-started the day on a mixed note as the Middle East tensions appear to ease, the GIFT Nifty indicating a flat to positive start for our markets. Oil prices rise nearly 1%, recovering from a sharp slide early this week. Data shows relatively strong US demand, and investors are also assessing the stability of a ceasefire between Iran and Israel. Meanwhile, gold prices hold steady ahead of US GDP and jobs data due tomorrow. And US President Donald Trump, in his address at the NATO summit, said that Israel and Iran are exhausted, but the conflict between the two countries could start again, maybe soon. Meanwhile, he disputed an early US intelligence report on the effectiveness of the US strikes on Iran over the weekend. He also said the US will meet with Iran next week. All right. Quickly take a look at how things panned out yesterday. A recap of what happened in trade yesterday. Markets ended at the highest closing levels of 2025. The Nifty managed to end above that 25,200 mark ahead of F&O expiry. Small caps outperformed yesterday. The index was up in excess of 1.5%. Market breadth was fairly strong, 3:1. That was the NSE advanced decline ratio yesterday. But sectorally, most of them ended in the green. But the Nifty Bank underperformed yesterday. It was up somewhere around 0.3% or thereabouts. In terms of sectoral movers, IT and FMCG, these were some of the sectors that were leading from the front. Autos also ended higher in the green ahead of monthly sales data. Of course, it's 26th, first is when the auto sales data will be coming out. In terms of fund flows, it's fairly patchy still. Foreign investors were net sellers to the tune of 2,400 crore rupees in the cash market. Domestic investors were net buyers to the tune of 2,300 crore rupees in the cash market. In terms of F&O Qs, put call ratio jumped to 1.13 vis-a-vis 0.8 in the previous session. And looking at the F&O ban list, we have a couple of additions. MCX India, that stock by the way hit a fresh high yesterday. On the back of a bullish report, and we saw the stock in fact has been doing fairly well in the last month or so. You have Titagarh Rail that continues to remain in F&O ban. But to understand what are the levels to watch out for today, let me bring on board Chandan Taparia, Senior Vice President, Head Derivatives and Technical Research at Motilal Oswal. Chandan, lovely having you as always. Good to know that we've ended at the highest level for 2025, 25,200 on the charts. We've managed to cross that level decisively. What kind of an expiry are you expecting today? 25,300, 350. Are those the levels that one should be working with on the upside?
Good morning, Nandita. Thanks for having me. So I think this is going to be fourth consecutive expiry, which is closing on positive note, starting from March 2025 and then April, May, and June. So on expiry to expiry basis, the index is up by around 1.65%. Volume weighted average for the series is at 24,900, and we are 300 points higher than the volume weighted average, which clearly indicates a bullish bias. If I look at the daily and the weekly chart, in fact, the index has seen a recent highest daily close and breakout is clearly visible. However, the momentum is missing in the market due to the lower wicks, but index has been making high rise, high lows. And for the day point of view, till it holds above 25,150, we are expecting the ongoing momentum to extend towards 25,400. And then positional point of view, we are looking for a rally towards 25,750. Here I want to highlight one more seasonality factor, that in the history of Indian market, out of all last 10 years, 10 out of 10 July were positive. In fact, 10 out of 10 July were positive for Dow, Nifty 500, Nifty 50. So I believe that seasonality factor will kick on and will give the bullish stance in the market. So on immediate point of view, with support of 25,150, looking for 25,400. For positional point of view, with support of 25,750, looking for a rally towards 25,750 to 26,000 marks in the Nifty index.
Okay, that's a very interesting data point, Chandan. 10 out of 10 Julys, we've seen positive returns. So looks like we may be in for a jubilant July this time as well. But in terms of Nifty Bank Index, hasn't really been able to fire up. If that index, the Nifty Bank Index, fires up, we could well be looking at 25,500 on the index. Your thoughts on whether or not the Bank Nifty is expected to shoot up today? How are you looking at it?
So today, because of the expiry, there might be the limited move because call writers are trying to safeguard them, but the put writer increased significantly in both the indices. So I believe towards the expiry, some momentum could be there because bears tried a lot to keep the market or to drag the market at lower levels, but they were unable to hold. Even FI short covering could maybe the trigger. But overall, I'm expecting Bank Nifty to rally towards 58,000 if looking for 2 to 3 weeks point of view. But on immediate point of view, till it holds above 56,250, look for an upside target towards 57,050. That is the lifetime high for Bank Nifty. So expecting momentum in both the indices. Bank Nifty was lackluster, slightly underperformed, but expecting momentum post this expiry.
Okay, expect momentum on the Nifty Bank Index post the expiry, and it has the legs to cross at 58,000 mark as well in the coming weeks. Couple of counters that will be in focus. We just have 5 minutes to go for the markets to open. There's been a couple of large trades, PB Fintech and Delivery. In terms of PB Fintech, we've had somewhere around 1.1% equity worth 920 crore rupees change hands at 1821 and a half per share, and sources were suggesting that Yashish Dahiya and Alok Bansal were likely to sell the stake, and the deal size was to be at $106 million, and base price was at 1800 rupees per share, which was a discount of up to 2.2% from yesterday's close price. Your thoughts on these two counters? How would you be looking at them post this large trade?
So let me first reply on delivery. Setup looks quite promising. In fact, then this stock is up by around 10% in this week. Given a decisive breakout about 375, it has been making high rise, high lows from last 4 trading session. So with support of 380, it can head towards 405, 410 kind of level. Talking about policy bazaar or PB fintech, it has been moving in a range, but supports are intact. From last 3 weeks, it has been moving in between 1800 to 1980. So with support of lower band, one can go for buy on decline. buy with support of 1800 for an upside target to recent high of 1978 marks.
Okay, that's the view on those two stocks. But another block deal likely hasn't taken place yet in one Mobikwik. The stock has gotten hammered. If you look at the price action in the last 6 months, last 1 month, no respite from selling. Just want to take you through the base price. That's at 0 to 8%, 8.5% discount to CMP, and sources suggest that Net One Applied Tech Netherlands is likely to sell 8% stake via block deals. Further pressure expected on this counter?
So, recently listed counter, we have the history of almost 7 months, starting from December 2024. But stock has been making lower top, lower bottom. Every meaningful bounce is being sold. I believe weakness could continue. One should not hurry. Let the counter go down and settle before we go for bargain buy.
Okay, that's the view. But let's talk about SBI as well. The stock is in focus, given the fact that it's a Moneycontrol exclusive. We've learned from sources that the bank has roped in large foreign investment bankers for the QIP issues. Citigroup, HSBC, and Morgan Stanley, these are said to be the preferred bankers for the issue. The bank is set to roll out 25,000 crore fundraise, and the QIP is likely to be rolled out either in August or September. I think I also spotted a query on SBI from a 6-month perspective. Somebody had asked a query. I'm kind of losing track of where the query is, but let's get that addressed. Yes, Komal Makecha wants to know your thoughts on SBI for a period of 6 months, possible target and stop loss. Looking at the shares, it's had an okayish kind of a 1 month, just flattish 1% or so. 800 or thereabouts, that's the level right now. Where would you see the counter going forward, especially with a 6-month view?
Yeah, so 6 months view is positive, but on immediate basis, the stock has been consolidating. Recently, it formed the bottom near 755 on the weekly chart, and the immediate bottom has formed at 780. So I believe that 780 could provide a key support zone for short-term point of view, and with that support, it can go towards 835. And if someone is looking for 6 months point of view, then I think 900, 920 could be the potential target, which is the lifetime high for the counter.
Okay, expect those levels. 900 to 925 on SBI. Hope that answers your query. But near term, of course, the stock has been consolidating. Another stock from the banking lot, Union Bank, it will be raising up to 6,000 crore rupees via equity and debt. This stock has also, seen some consolidation in the last 1 month. Hasn't really seen a big move. What would your strategy be when it comes to a Union Bank?
Yeah, so I think one can look at buying interest. In fact, has been consolidating. I believe with support of the previous day low, one can attempt for 3 to 5% swing in the counter.
Okay, very quickly before the markets open, MCX India, what would you do with the stock? It has entered the F&O ban. The stock has been consistently making fresh highs. What's your thoughts?
Yeah,
Is it a sell on rally kind of a stock, or would you
no, it's
advise a hold?
buy only. It might be in Ben period, but it's buy. I believe till it holds above 8200, it can go towards 9200 and positionally 10,000 kind of level.
Okay, expect 10,000 levels on MCX India going forward. But of course, the first ticks coming in. Opening bell 25,000 to 80. That's where we are at. It's positive start, third straight day of gains, 40-point uptick on the index, 111-point up move on the Sensex. Quiet start, but nevertheless with a positive bias. Mid cap index moving in tandem, no big moves there as well. 18 to 90-point uptick on the Nifty mid cap index. The advanced decline ratio as of now looks good, 5:1. That is the kind of breadth we are looking at right now. Bank Nifty extremely quiet, just about a 7-point move. Let's take a look at the sectoral picture then. Which are the sectors that are doing well? Yesterday, IT saw a good comeback. We saw the IT index gaining almost 1.5 to 2% or so. This morning, if you look at the sectoral picture, IT is taking a bit of a breather. It's trading with a negative bias, and so is pharma. Realty as well, some bit of selling pressure here. But autos are holding out, metals are holding out. In fact, metal at the current juncture is taking the lead. PSU Bank Index is trading with 0.3% kind of a gain. Oil and gas, up 0.3%. So, mixed picture really, but gains are being led by autos and metals. In terms of individual movers, let's take a look at the top names then. BEL, after a couple of days of profit taking, the stock is back in action. It's the top Nifty gainer, 2%, almost 1.5% kind of a gain. Of course, the NATO, the global defense spending, that has been doubled, from 2% to 5%. That's one trigger. Maybe that's why defense is back in action. But aside of that, you have Nestle India. That's also the top, among the top gainers. The board of Nestle India will be considering a bonus issue today. So that stock is also in focus. JSW Steel up almost 1%. Bharti Airtel continues its upward trajectory. Eternal, Hindalco, Jio Financial, Grasim are some of the other movers. On the flip side, Dr. Reddy's, there's a sell call on this particular stock from Citi, if I am not mistaken. So yes, the stock is the top Nifty laggard. Tech Mahindra as well, reacting to a brokerage note. Even here, there was a sell call on the stock. The stock is down 0.5%. Kotak Mahindra Bank, ICICI Bank trading with negative bias, and so is Reliance Industries, mildly lower in trade. Looking at the open, Chandan, just want to get your thoughts on Bharti Airtel continues its upward trajectory. 2000 levels almost here. So, how should one trade into this particular counter?
So positive on the name. In fact, we are recommending from last almost 6-7 days. It has been making high top, high bottom. Supports are intact, and I believe till it holds about 1940, ongoing momentum could extend to us 2050 kind of level. So I believe the entire sector is in focus, and Bharti is the leader and likely to see the momentum going forward.
Okay, a positive view. In fact, Motilal Oswal has been recommending Bharti for the last 6 to 7 days. But I want to get your thoughts on an RCF also from the fertilizer space. It faces a 204 crore hit as government has rejected gas cost request. The Department of Fertilizer has declined to recognize the cost of EPMC or spot gas used for Trombe urea operations during FY22 and FY23. Comes as a negative. The stock is, however, not reacting that badly. It's down, but no big cuts. And in the last 1 month, we've seen, the stock giving positive returns. Within the fertilizer pack, how is RCF stacked up on the charts?
So, to comment on fact, it has been consolidating, but I believe if it holds about 1055, it can attempt for a rally towards 1100. If I look at the other name, I believe the mixed set of cues is clearly visible. Even Chambal is underperforming. So I believe RCF and fact should be on radar, but fact is comparatively more interesting because a small follow-up could lead the fresh leg of rally. But talking about RCF, we have to play with positive to range-bound bias. With support of 152, look for an upside range target towards 165.
Okay, that's the view on fertilizer. Before I move on to queries, I want to get in your thoughts on a KNR construction, Chandan. Yesterday, the stock shot up 9-10% towards the end of the session when it won a big order of 4,800 crore rupees. I think the company's market cap is only 6,000 crores or so, and it has won such a huge order. Today as well, the stock is extending these gains. It's up 5%. So 15% uptick in the last 2 sessions. How would you view this breakout move, and what would be the next level to watch out for here?
Yeah, so positive on the selective such kind of real estate construction name, whether we talk about Prestige, KNR, Anantaraj, it has bottomed out given a decent run up in last 2 trading session. I believe 250 is the next target. So those who are holding or interested to take can buy with support of 233 for an upside target towards 247 to 250 marks.
Okay, that's the view on KNR. On that note, let's shift focus to some queries then. I want to take up a query on the chemicals pack first. Maheshwar Bhanu has written in, he wants your thoughts on alkyl amines and Balaji amines. In light of the anti-dumping announcements, he wants to know the targets on these stocks in the medium to long term. And he also wants to know whether one should hold on to it or exit.
I think one can hold the name. In fact, bullish resistance is clearly visible from the lower support. So I think one can hold. As of now, it seems that the stock can see an up move of 4 to 5% from current level.
Okay, 4 to 5% up move can be expected. Hope that answers your query. What would you do with an Infosys now? There's a query from Naveen. IT stocks off late had witnessed good buying interest. Then day before yesterday, we saw all of those stocks succumbing to profit taking. Yesterday again, IT was at the forefront of gains. And today, once again, some bit of profit taking. How would you really trade into some of these IT names ahead of numbers?
So positive view on selective IT name. However, view is positive range bound rather than being aggressive on positive stance. I believe Infosys has recently taken support at 1575, and with this support, the base is shifting higher to 1585, 1590, and it can head to a 1650 to 1660 kind of level.
Okay, that's the view on Infosys. No aggressive positive, but range bound positive. That's the view. That's the view on some of these selective IT names. Let's take up a query on Praj Industries. Then this one's coming in from K Naga. Just want to see how the stock has been behaving. Shares of Praj Industries. If you've been tracking this, any particular level that you'll be watching out for here on a Praj Industries?
So Praj recently bottomed out at 475. It's in a range from last couple of weeks. However, the momentum is missing. The good part is slightly forming the higher base. So with support of 490, it can head towards 520 level slow and steady.
Okay, that's the view on Praj Industries. Hope that answers your query. Just talk about PG Electroplast as well. There's a query that's come in from Anunay, and he has bought shares at 844. He wants to know whether he should exit or what should he really do from here. Any thoughts? His buy price is 844.
Yeah, so I think for PZ, we are not tracking closely, but looking at the technical setup, 730 is immediate support for range bound bias towards 800 bounce back level.
Okay, 730. That is the level that you need to watch out for. Hope that answers your query. There's a query on ICICI Bank as well. Stock has been kind of on the back foot. If you look at the last 1 month or so, hasn't really fired up. Some bit of consolidation at 1428 or thereabouts. Any thoughts on whether it should be bought at the current juncture?
Yeah, so it has bottomed out, in fact, consolidating in a range from the bottom at 1400. Now at the verge of the breakout, I believe this breakout should come very soon. One can buy with support of 1405. Look for an upside target was 1470 in the counter.
Okay, that's the view on an ICICI Bank. One query on Bharat Electronics from Debu K. The stock, couple of days we saw the stock take a breather, but today again it's back in action. Should it be bought at 410 or 412 levels?
I think let's wait for some more decline. Some consolidative move could be there after the recent price setup. So I think wait and watch and let it see some more consolidation before going for the entry in the counter.
And what about Garden Reach? What are your thoughts here, Chandan? Arpan wants to know what one should do with a Garden Reach. Could it be bought at CMP? That's the query.
This stock really rallied well in last couple of months, but now from last 2-3 trading session, we have seen some corrective move. However, major trend is positive, but looking at the daily chart, a decline could be seen. So I think those who are interested, try to accumulate near 2700 to 2650 or 2750 marks. So not advising to buy at current level, buy only on decline. That will give more or better risk reward status to the counter.
Okay, that's the view on a Garden Reach. Next one on a BSC. Varsha Gajjar wants to know whether she should book profits in BSC or not. Today, of course, a down day for BSC, so to say 1% down, but the stock, of course, has been doing phenomenally well. Should one wait for dips or go ahead and just jump into this stock?
So major trend of the counter is positive. It really developed 3,000, drifted to 2,500, again recovered to 2,865. So like if someone is having the positional view can hold, but for immediate point of view, I believe some sort of consolidative move could be seen. Major support is at 2,500. Buy on decline can be applied with that levels.
Okay, that's the view on a BSC. A query on Nestle then, the stock is in focus. It was among the top Nifty gainers. They will be, considering a bonus issue. Within the FMCG basket, would you look at Nestle or would you, look out the others, look at the others like HUL? Thoughts? Right now, of course, it's up 1%. Last 5 days have also been fairly okayish for the company stock.
So I want to go with Britannia, which is holding well given the
Hmm.
breakout. So I believe with support of 55.50, it can head towards 6,000. So I'll prefer Britannia compared to all other FMCG name.
Okay, Britannia preferred. Comparatively, that stock is looking better on the charts. Next query from Manish Verma on what should the strategy be on a Dixon Technologies. Is it a sell or a buy more? He is sitting on a profit of 80%. What should he do?
So I think he can hold. The good profit is seen. I think in market, if you are holding the good name, that can reward well. But the only problem is the stock has recently seen a corrective move. The immediate trend has drifted lower. Earlier, the stock really rallied well in the 2024. In the year 2024, I mean, rallied well from 6,000 to 19,000. But this year is down by around 20%. So it has been struggling to hold 13,400 to 13,800 marks. After the result and the management commentary, the stock witnessed some pause in positive momentum. So I think if someone is looking for slightly bigger time frame can hold, but for immediate point of view, I think upside could be kept in the counter.
Okay, upside could be capped in the near term, but great profits there. Congratulations to you. Uh, you know, uh, don't have your name here, but congratulations on the good profit that you're sitting on. But the next query is on a City Union Bank. This person is holding the stock at 161 and wants to know whether they should continue to hold, or book profits. City Union Bank has seen some traction, but it's very close to 52-week highs. Does it? Would you play it for higher levels beyond 208 rupees?
So yes, one can look for buying interest. As of now, the support is at 193. With this support, it can head towards 215 kind of levels.
Expect 215 kind of levels. I hope that answers your query. The next one is coming in from Satish Guntur, and he wants to know your thoughts on Nitin Spinners. No pointed queries, but just want to see what the stock is doing. The stock is up 1% today and has seen a good 5% up move over the last 5 sessions. Do you see chances of a pickup and the stock clearing the 400 rupee mark on a decisive note?
Yeah, it can head towards, I think 420, 430 could be the positional target for the counter.
Okay, that's the view, and those are the upside targets to watch out for. I spotted a query on a PNB housing from Alex. Wants to know the resistance levels here. It's at somewhere around 1090 or so. What is the kind of resistance level one should watch out for, given the fact that the stock has seen a good up move, 6 odd percent over the last 5 sessions?
So with the support of 1060, one can look for an upside target towards 1140 to 1180. So overall looks good. One can drive the momentum here.
Okay, hope you've taken note of the levels that were mentioned by Chandan. With that, Chandan, we've come to the end of the query segment. But before I let you go, what would you be recommending for our viewers this morning?
So I'm expecting momentum in the broader market. Nifty can head towards 25,750 to 26,000. In fact, playing the momentum of expiry day as well. One can participate in 25,300 call on dip, expecting this call to head towards 128 to 135. Talking about stock specific, positively on the Bharti Airtel. With support of 1950, it can head towards 2040 kind of level. ICICI Bank has bottomed out with support of 1400, it can go to 1490 kind of level. So these are the couple of ideas, and in fact, positive on the broader market, expecting a good surprise from the market towards 25,750, 26,000 in the Nifty and 58,000 plus in Bank Nifty.
Okay, that's some good, words to hear from Chandan this Thursday morning. 26,000 on the Nifty, 58,000 on the Bank Nifty, and also the fact that you pointed out that 10 out of last 10 Julys have given positive returns for the market. So good chat, Chandan. As always, I look forward to our next one as well. Have a great day. Thanks a lot for joining in this morning.
Thank you.
Thank you. Let's take a look at what the markets are doing at the current juncture. Okay, we've picked up pace. In fact, we've cleared that 25,317 swing high that we cleared earlier this week. We are now at 25,360 or thereabouts. It's a triple digit move on the index. Sensex up 370 points or so, but the mid-cap index is underperforming as we speak. It's barely holding out in the green. The Nifty Bank index has also picked up, some bit of pace. It's up 0.2%. The breadth is looking extremely good. Sectorally, it's a mixed picture, but last I checked, it was the auto and metal basket that was leading from the front. Right now as well, I think, it is the auto and metal indices that is driving the gains. IT under a bit of selling pressure this morning, and so is real estate. But on that note, let's bring on board our next guest for today. Joining me is Kranthi Bathini, equity strategist at WealthMills Securities. Kranthi, lovely chatting with you this morning. My first question to you is, we've seen a fairly volatile, choppy move over the last couple of months, and with all the Middle East tensions, though we have digested it pretty well, but it was a fairly choppy ride. Looking at July,
Nandita, sorry, there is some
the earlier guest mentioned that
disturbance in the line. I'm not able to hear to you.
all right, we
Nandita, I'm
will
audible
look
to
at
you?
fixing the. Yes, I can. Can you hear me? I can hear you very
Yeah.
well. Can you hear me now?
Yeah, I can hear you, Nandita.
Okay, great. So what I was asking you was, 10 out of 10 Julys, the market has given
I'm
positive
I'm I'm
returns. So
sorry.
we
There's
have the
some disturbance in the
seasonality
line. I'm
factor.
not able to hear to you. I'm not able to hear to your voice. Sorry.
Okay, so we will fix that. As the PCR fixes it, let's quickly take a look at what the markets are up to. It's a 150 point up move on the Sensex, on the Nifty, I beg your pardon. We are inching towards that 25,400 mark as well. Remember, we aren't very far from the
Again, I'm
lifetime
not able
highs
to
on the
listen to
index. We're
Nandita.
just about 3.5. We are just about 3.5 to 4%, 3.5 to 4% away from the all-time highs on the Nifty. Even the Sensex for that matter, it's 400 points up, 0.5% up move there. The mid-cap index trading very flat, but with a positive bias. So let's take a look at some of the movers on the mid-cap end of the markets as well. What are the top movers on the Nifty 500 index that are doing well at the current juncture? Just want to see, it's the stocks like Alok Industries, Newgen Software, Trident, Whirlpool, Apar Industries, Tejas Networks, Data Patterns. Stocks like Data Patterns, were under pressure yesterday, but now we are seeing good buying coming in. Godfrey Philip, that's another stock that's doing well. KNR Construction, yesterday it saw a 9% up move at the fag end of the trading session when it won a 4,800 crore rupee mega order. Today is extending those gains. It's up almost 3% or thereabouts. On the flip side, what's not doing well is UPL. But it's down just about 2.5% or so. Endurance Tech is another stock that's down 2%. Colgate, that's down 2%. Reddington, Macrotech Developers, Sammaan Capital was a big mover yesterday, seeing some selling pressure today. Go Digit Insurance, that's down 1%. Crisil, Deepak Fertilizer, Oberoi Realty, these are some of the other laggards. Even Vishal Megamart is on the losing side. Just want to check if we've established our connection with Kranthi. Kranthi, can you hear my voice? Okay, we are still fixing the line with Kranthi, but let's take stock of some of the movers then. Dr. Reddy's, that's the top Nifty laggard right now. There's a sell call on this particular stock, from a global brokerage. I think it's Citi that has come out with a sell call on this particular stock. The stock is down 1% as we speak. Just want to take you through what the brokerage is saying and why it has a sell call on the stock. The target price, in fact, has been cut to 990 rupees from 1040 rupees on Dr. Reddy's. They're saying that a deep dive on the Canada GLP-1 market suggests that street expectations need to be tempered. Timely approval will be key to monitor given past misses on complex approvals from the regulators. So yes, the street is expecting a lot in terms of the GLP-1 opportunity, but timely approval will be something that needs to be monitored on that front. Of course, the Revlimid sales are expected to decline when the patent expires in 2026, January 2026. Post that, of course, how the company plans to plug that gap on the revenue front, that's something that will be another monitorable when it comes to Dr. Reddy's. Decline in Revlimid sales, according to Citi, will result in a drag of $750 to $780 million in EBITDA, and that would be difficult to offset, according to Citi. In fact, but it has also said that the next 2 quarters are looking strong for Dr. Reddy's, given the fact that there is a supply of the remaining quantity of Revlimid, that's coming by. So yes, because of that, the outlook on Dr. Reddy's, mind you, is negative as of now, because once that opportunity, that Revlimid patent expires, that's when the trouble will start trickling in for Dr. Reddy's. Aside of that, another stock that wasn't doing all that well is Tech Mahindra. Here as well, Citi has a sell call and the target price is at 1430 rupees. They are saying that the management is very focused on 15% EBIT margin target for FY27 that they had set earlier, and revenue trajectory has seen some impact given macro uncertainty and impact on discretionary spends. Remember, because of the US tariff impact on inflation, rate cuts in the US have been deferred. In fact, we've had the Fed chairperson saying time and again that they are going to assess what kind of an impact the ultimate tariff levels will have on inflation, and only then will they go ahead and cut rates. So yes, that rate cut timeline has been delayed when it comes to US, which could in turn delay a pickup in discretionary spending. And of course, there is a fair bit of macro uncertainty, of course, as the Fed assesses what kind of an impact the tariffs will really have on economic growth as well. So yes, that means the revenue trajectory for some of these IT names could be a little iffy, at least till the uncertainty subsides. So yes, that's something that Citi has pointed out. They have said that valuations at 28 and 23 times for FY26, FY27 consensus EPS, and a lot of improvement has already been priced into the stock of a Tech Mahindra, which is why they have a sell call on this particular stock. Also want to see what an Indigo is doing in trade, because there is an initiation call in fact there is an initiation rather on this stock from B&K Securities. They have initiated with a buy rating and a target price of 7,256. Right now the stock is trading higher by 0.5% or so, so no big moves, but it's trading in the positive. 5,662 is where it's at, and the target price is at 7,256. So yes, a fair bit of upside expected on shares of Indigo by B&K Securities. They maintain that India remains a highly under-penetrated travel market, and aircraft supply constraints will ensure that demand overstrips supply going forward, and that will of course bode well for the airline. They are building in an EBITDA PAT CAGR of 20 and 22% over FY25 and FY27. The stock, according to B&K Securities, is trading at 20 times FY27 earnings per share. So yes, those were some of the movers, but let's understand whether we have Kranthi back on with us or not. Kranthi, if you can hear me. I don't think we have Kranthi with us. Then, Kranthi, can you hear me?
Listen to you.
Can you hear me?
Yeah, I can hear you.
Okay, great. So, what I was saying was over the last 10 years, we have seen July giving positive returns. So, we have seasonality factor in our favor. But we also have the July 9th tariff deadline looming. In case, a deal doesn't fructify, would that be a big dampener? Would that be the next catalyst for the market? Because we are not very far from all-time highs now.
Yeah, Nandita. Yeah, markets also waiting for the tariff implication that are going to hit the market. But by and large, markets are preparing for the tariff implications going ahead. What we can expect from these tariff implication is again some kind of a knee-jerk reactions. I don't think so. By the tariff deadline that comes, every country is going to have a bilateral agreements with the U.S. administration. But there would be a knee-jerk reaction. What we can expect. Because of these tariff implications, the entire saga of this tariff exercise is going twists and turns. Not only with India, it's happening with every country, including all the major trade partners of US. So definitely, it's going to give some kind of a knee-jerk reaction going ahead. The commentary also uneven. And because these are all policy decisions, and also every country need to protect their interest with respect to their trade, and the consumer and producers are concerned, it have its implications. But we need to see how the entire smooth transition of these tariffs we need to see in the next couple of weeks.
Okay, we need to see, what really happens ahead of the July 9th tariff deadline. But let's talk about sectors then. How are you approaching the IT space now ahead of earnings? Because Accenture, if that were to go, anything to go by, the guidance was upped, but we saw deal bookings, disappointing. And of course, rate cuts being delayed in the US. Discretionary demand may remain under pressure for quite some time. But if you look at the IT stocks back home, we've seen good traction in the last few weeks. How are you approaching it? What is your read through? What are your expectations when it comes to the IT names?
Nandita, in the medium to short term, there is a lot of uncertainty with respect to IT pack is concerned. One thing is, of course, there is a complete uncertainty with respect to US budgeting and the operation expansions are concerned, and also the rate cut overhang also still there with respect to IT companies are concerned. But given the kind of the Indian IT companies and their business models, how they weather through different times of it can be various trade cycles the IT companies have witnessed. On a medium to longer term perspective, IT pack looks attractive in terms of the valuation is concerned, despite of this medium to short term uncertainty. So if the investor is a long term investor, definitely one can add IT companies in a very staggered manner. But definitely the trade implications and also the US growth prospects are going to dampening the sentiment of the IT companies in the medium to short term. On a relative perspective, the IT companies' long-term averages are sometimes whenever there is a correction in the Indian markets, it looks the IT companies they trading below the long-term averages. That's where we can see some kind of a cherry picking taking place with respect to IT companies. It can be the large cap and mid cap IT companies are concerned, and there is also a domain specific and geographic specific play also playing with respect to the IT companies. Until unless if I am an investor who want to keep my money for a time frame more than 3 years, one can venture into IT companies in a very staggered manner. Medium to short term, definitely there's going to be some kind of a overhang is going to be there with respect to Indian IT pack is concerned.
Okay, that's the view on IT, looking at buying, staggered manner. What about pharma? For generics like Dr. Reddy's, the Revlimid, patent expires in Jan 2026. That would be a big gap, right? And some of the brokerages have come out with reports where they've said that that EBITDA gap, will be difficult to plug. But on the other hand, you have the GLP-1 opportunity as well. Which are what is the segment within the pharma pack that you prefer now? Would you look at CDMO? Would you say that CDMO has better prospects, or would you say that generics are looking okay, and perhaps they would be looking at ways to plug that Revlimid hole as well?
And at this juncture, by and large, we are quite neutral with respect to pharma pack is concerned, and the overhang of both the trade and also company-specific implications are concerned. They're going to weigh on the pharma pack is concerned in the medium to short term. But by and large, we are looking for companies which have a domestic centric in terms of their revenue models are concerned. We are slightly varying with respect to the companies which have more about the US exposure. That's where we are a little bit cautious in the medium to short term. But right now, we are quite neutral with respect to IT pack is concerned. It can be any company. By and large, we are looking for the domestic growth drivers at this point of time to make any kind of serious investments. If there is any kind of a great value buys that took gums with respect to the companies which have the global exposure, that's where we are looking forward in a very company specific way. But by and large, the export oriented pack, the companies which have more exposure towards the global exports are concerned, we are slightly varying in the medium to short term.
Okay, that's the view, neutral on pharma. But what about consumption? Are you seeing any signs of pickup in urban consumption? How would you really play the consumption theme? Would it be via rural, given the fact that inflation has cooled off? You've got the rate cut cycle also, underway, and tax cuts were announced in the budget. There's a good monsoon as well. So, in light of all these tailwinds, which end of the spectrum would you look at?
Yeah, with respect to consumption is concerned, Nandita, we are going very positive with respect to the consumption theme is concerned. It can be the rural as well as the urban consumption pack is concerned. The one way is consumption can be divided into FMCG and also the high end of the consumption also taking place at this point of time. Still, the consumption demand is not factoring into the companies at this point of time in terms of the listed space is concerned. But definitely there is a pickup of consumption. The consumption cycle is at a uptick, and the key worry and overhang with respect to the rising crude oil prices, which has been hammering this consumption theme and also the inflation theme in the medium to short term in the last few days. Right now, we can see some kind of a downtick in the crude oil price. And what we believe is, despite of these geopolitical concerns that do create some kind of a knee-jerk reaction with respect to the crude oil prices are concerned, what we believe is the long-term crude oil is in a bear market, which is completely favorable to Indian markets. As and when there is a geopolitical issue that's taking place, when there is a complete escalation, we tend to see worrying about the crude oil prices. But what we believe is it's a medium to short-term phenomena, and the longer-term crude oil prices are completely in favor of markets like India. But we need to see how this trend is going to be. Whenever there is a geopolitical issue, they are going to create some kind of uptick and a spike in the crude oil prices. So when the crude oil prices are trending in a downtrend, the inflation came to control and we got a bonanza and bazooka of kind of a rate cut we got. And if the rate cut cycle is going to continued, so we can expect some kind of a consumption to pick up and a credit growth to pick up going ahead. That's where we are looking forward in the medium to short term. And also the Federal Reserve rate cut is still, it's a overhang at a global scale is concerned. But the domestic, if the inflation is going to cool down further, we can see some kind of a credit growth that's going to continue. We had a early monsoon, but the progress of monsoon has been little bit slow in the couple of first few weeks of the monsoon progress. If the monsoon progress well in the coming weeks, definitely we can see the rural consumption also taking a uptick that will fuel the consumption story in India going ahead.
Okay, one more question on defense then, in light of all the geopolitical, disturbances, right from Operation Sindoor, we've seen defense coming back in a big way. But last couple of days haven't been all that great. We've seen profit taking kicking in, but now globally there is news flow. NATO has agreed to hike defense spending by 5%, and of course Indian manufacturers also stand to gain. But what is your overall view on defense? Do you think valuations are matter of concern, because orders rather are flowing in thick and fast, but execution, that's what Street really needs to watch out for. So what's your overall take on the entire defense manufacturing pack right now?
Nandita, we have been quite bullish about the defense space is concerned from the past 3 years, and the defense have been one of the outperformer for our portfolio in the past 3 years, and we continue to have the same stance. The defense is going to outperform in the medium to long term. But in the recent past, as you rightly mentioned, from the recent geopolitical escalation between India and Pakistan from Operation Sindoor, we have witnessed defense stocks have been rallying more than 50 to 100% in some companies getting recovered from its bottom. So on a medium to short term perspective, they're fully priced in. We need to see the defense companies at a very stock specific, and also the way they operate and what kind of product proposition they have. We can't tag all the defense companies at the same theme at this point of time. Of course, I tend to agree with you. There can be some kind of froth in some kind of a companies, but by and large, the large cap space is concerned, like Hindustan Aeronautics, Garden Reach, Mazgan Dockyard, Cochin Shipyard, BEL, these kind of names are concerned. They tend to priced in at this point of time, given the kind of current valuations are concerned at this point of time. But definitely, if the market gives any kind of dip, one can buy these stocks in their portfolio on a medium to longer term perspective, because of there is a clear cut earning visibility, and also order book visibility is there for these companies. Definitely defense are on a longer term basis. Definitely any dip in defense companies, it's a warranted buy for the investors. We also having the defense theme itself. Right now, the aviation theme also playing with respect to defense aviation is concerned. So there are some kind of positive developments that are taking place. These developments are going to have a long-lasting impact in the medium to long term. So that's where the opportunities can lie. The MRO business in the defense space also looks very attractive. In the civil aviation, MRO looks very attractive. And also the companies involved in the aircraft engine making is concerned, these companies also throws a very good opportunities for the investors in a medium to longer term. So as well as to sum up, the defense space is concerned, definitely any dip in these stocks is a good entry level for the investors, and one can accumulate these stocks for a medium to longer term perspective.
Okay, that's the view on defense. Lastly, tactically, which are the sectors that you would prefer right now?
Nandita, it's going to be very stock specific at this point of time. We are going to enter in the next couple of weeks into the earning season. And right now, buying the value is the crux in this market. When anyone is a hardcore value buyer at this point of time, looking for these values, one need to have to wait patiently. And whenever these kind of knee-jerk reactions, the global geopolitical escalations tend to offer, that's where we are picking up the stocks in sectors like power, as you mentioned, any dip in the defense, and also the engineering and infrastructure theme is concerned. It's look very attractive to me. And also the discretionary consumption also themes looks very attractive to me. Whenever the market takes a knee-jerk pause and when there is a correction and consolidation, that's the time one need to pick up the stock. Definitely, Indian market is a warranted buy at every dip.
Okay, buy on dips, that should be the strategy. And power, defense, these are some of the sectors that Kranthi is advising to look at on a tactical basis. And of course, for the long term as well, as he pointed out, the prospects are fairly good. But with that, Kranthi would like to thank you for taking out time and joining in this morning. Always a pleasure, and I look forward to our next conversation as well. Thank you for joining in.
Thank you.
Well, on that note, take a look at the market. We've breezed past that 25,400 mark as well. So yes, momentum has picked up. Bulls are taking the lead, but talking about the broader end of the markets, there's been some bit of a cool off there. The mid cap index has slipped into the red, and the small cap index is just about managing to hold on to the positive territory. But benchmarks, it's the large caps that's leading the way today. In terms of the top gainers, on the index, you have Jio Financial, Bajaj Finance. These are some of the names that are taking the lead. Shriram Finance. So yes, financials doing well. Bharti Airtel has cleared the 2000 mark. So that's one stock that's gaining traction among the top Nifty gainers. Just want to see whether Airtel has hit a fresh 52-week high as well today. Yes, it did. 2004. That's the fresh 52-week high that Airtel has clocked. Aside of that, look at shares of Grasim up 2%, Tata Steel, Ultratech Cement, HDFC Life, Nestle ahead of the bonus issue consideration, and Tata Consumer, Eternal, Hindalco. So yes, the list is long, and a lot of gainers, a lot of names from consumption, financials, even for that matter, you have HDFC Life, SBI Life doing well. On the other hand, you have Dr. Reddy's, that's out of favor. Tech Mahindra out of favor. Citi has sell calls on both these stocks. SBI under some bit of selling pressure. From the auto pack, Hero Moto, Eicher and M&M are sitting out. And you also have Trent that's down 0.5% or so. But the list of losers is pretty slim at this current juncture, and that's something to take heart from. But yes, nothing to really complain about. The Nifty Bank Index, although not firing up so to say, but it's nevertheless trading with gains of somewhere around 0.3% or thereabouts. So yes, a good day of trade. It's monthly F&O expiry, and looks like 25,500. Who knows? If we pick up a little bit more steam, perhaps we could clear that level today itself. But with that, we are timed out on opening bell. Thanks a lot for tuning in, but you guys stay tuned to Moneycontrol for all your other news and updates, and I'll see you with closing bell at 3:30 p.m. Have a good day.